Okay, folks, today is Wednesday, August 14th. Let's start by saying how much we lost today. And yes, we did lose, even though we were in 50% Putnam stable value, 25% 2060 target date, and 25% Harbor Capital. Pretty much all the major U.S. markets were down about 3% today. So we lost about 1.6% today. However, let's look to see what Harbor Capital lost. Harbor Capital should have lost close to 4%. Okay, before yesterday, we were neck and neck with Dodge and Cox. You see we're at a 10.15. Dodge and Cox stock is down to a 7.52. So they lost about 4%. Harbor Capital, the one we always compete against, I think the other day was like a 19.7. It's down to a 15.7. So even though we lost, we didn't lose as much as everybody else because we weren't fully invested into like Harbor Capital or 2060 target date. So today I'm trying to share my plans on where I think Harbor Capital is going to finish for the year. I think Harbor Capital will finish between plus 25 and plus 35% for the year. So my plan is in the next few weeks just to stay 100% Harbor Capital. But I want to make sure we hit a nice bottom before we do that, because I'm pretty sure Harbor Capital is going to be one of the better performing funds for this year. So earlier in the year, I think it was probably closer to the end of May, we actually was beating Harbor Capital. But remember, Harbor Capital at least twice this year has been up to 24%. The first time it got up to 24%, it dropped all the way down to 10%. And then it got up to 24, 25% again. And now it's down to like 15.7%. And hopefully we're done losing. If not, I expect Harbor Capital to get really close to 10% before it starts going back up. That seems to be the big pattern. So if that's the case, when Harbor Capital gets down close to 10%, we'll go 100% Harbor Capital. We'll wait till it gets up close to 20%, make sure there's no corrections, and then we'll probably ride that out for the rest of the year. But we'll just see how that goes. Let's see how the markets actually finished today. Okay, so here's the official close for the U.S. markets. The Dow was down 800 points or 3.05% for today. S&P 500 was down 2.9%. NASDAQ was down 3.2%. 3.02%. And small caps was down 2.69%. So I'm not sure if I put this in one of my earlier videos, but I know I tweeted it out to the group where I said last week where the market kept going up and down. When Friday hit, I knew that we were still owed about a 3 to 3.5% down day to make up for last week. I just didn't expect it to be today. So that's one thing that I got right. The second thing that I got right is I told everyone that the U.S. 2-year Treasury yield, once it got above the U.S. 10-year Treasury yield, there was going to be a massive sell-off. Well, guess what? That happened today. For the first time this season, for the first time in 12 years, the U.S. 2-year yield was higher than the U.S. 10-year yield. Another thing that we're keeping an eye on is the U.S. 30-year yield. It hit an all-time record low today. So I'm keeping a close eye on the U.S. the U.S. 1 month, which is over 2%. And the U.S. 30-year yield is about to be under 2%. If we get that happening, now you get a full yield curve inversion. from the 1 month all the way to the 30-year when that happens. I'm not sure if the markets are going to sell off when that occurs because most people watch the US 2-year yield and the US 10-year yield. So historically speaking, we have about, we might have a year anywhere between 6 months and 2 years before we're officially declared in a recession. So going forward, we have to be pretty cautious on what we do. I do think this year the markets are going to be up. They're going to finish up between 25 and 35% because what's about to come is all the governments around the world are about to put a whole bunch of money into the economies through stimulus, through cutting interest rates to boost up the stock markets and try to keep them up as long as possible. And they're trying to keep the economies going as well. Let's take a look at futures. Okay, so here are my thoughts. So basically what we did today, we came down and tested a resistance level from last week in the markets. So hopefully that's the bottom. If that's not the bottom, within the next couple of weeks, we will hit the bottom, and that bottom is down another 3 to 4%. That'll be, I think it was June 2019 lows. So it's a very good chance we're going to go and retest those bottoms here soon. What I'm hoping is from here, we gain the 3% that we lost today and probably another 1 or 2%. If we do that, we'll get back up to about the 20-day moving averages. That's going to be a natural resistance line. And then I think we're going to go from here, hit the 20-day moving averages, which is up another 4.5%, 5% from where we are now. It's probably going to sell off from there and then come back down to test the June lows. So it'll fall about 5% plus another 3.5%. So it'll fall about 9, 10%. And then from there, we'll probably go and make new all-time highs. So hopefully it plays out that way. It'd be nice if we went straight from here all the way up to test the new all-time highs and then came back down and test the June lows and then went all the way back up to make new all-time highs. If we did that and we recognize that pattern, we can make a lot of money, but there's no telling that's going to happen. Just keep in mind, we do stand the risk of losing another 3 to 3.5% over the next week or so. If we do that, we'll just try to stick with 100% putting stable value for the rest of the year. And hopefully we wind up between a 25 and a 35% return doing that. Let's take a quick look at the U.S. Treasuries. Okay, so like I was saying before, the U.S. 2-year yield, 1.565. U.S. 10-year yield, 1.564. So you got that yield inversion. Oh. And then look at the U.S. 1 month. It's a 1.98%. Look at the U.S. 30 years, a 1.997%. So that's very close. So probably in the next day or so, that'll occur. Hopefully we don't have another sell-off. And then you will officially have a full yield curve inversion when the U.S. 1 month is higher than the U.S. 30 year. So let me know your thoughts. It's a shame that we had to lose today. A lot of times I can tell what the pattern is. I'm just like a day or a couple of days off, so that's something that I'm working on. The pattern is very hard to figure out, especially in the summer, especially when you have different tweets going on. You got different political issues like Hong Kong. You know, a lot of it's very hard to predict. If it was easy, everybody would be doing it and making money. I make these videos so I can put myself out there Sometimes I'll be right, sometimes I'll be wrong, but I'm learning on the process. Our biggest thing is to control our losses, to beat everybody else out, and to make money. So like, comment, share, subscribe. I really do appreciate all of you. Later.